Hello everybody and welcome to this week ahead video covering the trading week from the 20th to the 24th of May 2019. Now our main focus points for this week will be a possible trading opportunity on the Aussie dollar with the RBA's most recent monetary policy meeting minutes as well as a speech by Governor Lowe. And then we also have a possible trading opportunity on the euro with very important PMI numbers due on Thursday. So let's jump to the video and see why these two events will be important for the markets this week. Now our first focus point for this week is a possible trading opportunity on the Aussie dollar. At their previous meeting 2 weeks back, the Reserve Bank of Australia left interest rates unchanged at 1.5%. This caused an initial jump in the Aussie dollar as over 40% of market participants were expecting the RBA to cut rates at this meeting. Now the RBA lowered their growth and inflation forecast, but more importantly, they reaffirmed their criteria for a rate cut, which is falling inflation and rising unemployment. Now anticipation for a rate cut has risen after the latest CPI data showed a fall in inflation, and after last week's rise in the unemployment rate from 5.1 to 5.2%, this anticipation for a rate cut has risen substantially. Now according to some investment banks, the rise in the unemployment rate was mainly due to a sharp rise in the participation rate. Thus, more people entering the labour market drove the unemployment rate higher and thus painted a slightly more positive picture for the labour market as a whole. Now that brings us to this week's focus point, which is the RBA's meeting as well as a speech by Governor Lowe. Now what the market will be looking for at these two events is further clarity on the criteria for a rate cut and whether they have been achieved. Now if the meeting minutes or the speech by Governor Lowe confirms that a rate cut is highly likely or imminent, we would expect that to put further pressure on the Aussie dollar. Alternatively, if the minutes or the speech gives a shimmer of hope and alludes to another possible hold by the RBA, that would be supportive for the Aussie dollar. Now something else to consider for the Aussie dollar is the recent escalation in the US-China trade war. Any further escalation will probably put pressure on the Aussie dollar, and any de-escalation should be supportive for the commodity currency. Now a second focus point for this week is the euro. Now the Eurozone's fundamental bias has been bearish for quite some time now, and the reason for this is due to the ECB's overly dovish tilt made at their meeting on the 7th of March, as well as continuous deteriorating growth data we've seen out of the EU throughout 2018 and the start of 2019. Now at their previous meeting, the ECB confirmed their downside risk assessment on EU growth, and until growth improves, guys, the ECB will likely keep to its dovish stance. Now this makes PMI releases very important. As a leading indicator for growth, the markets will look to the PMIs for signs whether the EU economy is still decelerating or whether it is starting to bottom out. Now PMI numbers for the EU and German manufacturing has dropped well below the important 50 level in recent releases, and the market will be focused to see whether there is a continuation in this downturn or whether we see a slight recovery from the bad numbers. Now we could take any big miss on the PMIs as an opportunity to sell the euro at market, and would use any decent rallies from better than expected numbers as an opportunity to sell the euro at better levels. If we take a look at the calendar, guys, for the French numbers we can see that the markets are expecting a slight uptick, as well as for the EU numbers. So the markets are expecting slightly better numbers from prior. So any big misses on any of these numbers, whether it's French or German or EU numbers, could provide a great selling opportunity on the euro this week. Now that we understand the fundamental reasons for why we want to trade these currencies, guys, we can move on to the charts and look at some of the technicals. Now we'll follow the same technical approach for every chart we look at in order to ensure that we stay consistent in our methodology. Now in case we have any indication that the likelihood of a rate cut by the RBA is increased with the release of the minutes or by the speech from Governor Lowe, we could look to short the Aussie dollar against something like the US dollar, which remains the most attractive G10 economy and currency at the moment. Then if we see a big beat in the PMI numbers for the EU, we could look to short the euro against the US dollar for the same reasons mentioned above. So moving on to the charts and looking at the Aussie USD, we can see that the pair has recently broken through a very significant support level and psychological area at the 0.70 handle. Now we can see from the chart, guys, if we draw in our fib from the recent swing high to the swing low, that we do have confluence with the 38.2 fib as well as the 0.70 handle and this previous daily support area. Now thus a pullback into this area could provide a good opportunity to sell the pair in line with our fundamental reasons. In terms of a stop loss, guys, we can use this minor swing area on the daily chart right over here as a possible place to place our stop, which is just below that 0.71 handle, and if we use the 100% fib extension, we could look to target something close to that 0.67 handle. And then moving on to the Euro USD, Just like the Aussie USD, the Euro USD has broken through a significant daily support level and psychological area at this 113 handle. Now we can see from the chart, guys, if we draw in our fib from the recent swing high to the swing low, that we do have confluence with the 38.2 fib as well as the 112 handle and this minor support area as well. Thus, a pullback into this area could provide a good opportunity to sell the pair in line with the fundamental reasons, but a move back to the 113 level, guys, is possible, so do keep that in mind as well. In terms of a stop loss, we could use this daily swing and place a stop right above this level, which is just above the 112 handle. And if we use the 100% fib extension, we could look to target something closer to that 110.50 or the 110 handle. And that's the end of this week ahead video. Guys, these videos are designed to get you into the mindset of thinking like a professional trader. And as such, it's important for you to realize that you don't need to fear the red risk events in the markets like Governor Lowe's speech this week or the important PMI numbers, because these events can be some of the best ways to trade the forex markets. Also remember that these trade ideas are dependent on the incoming data we receive each week, so make sure to pay close attention to that market moving news as it comes through on your news squawk on a daily basis. We wish every one of you a profitable trading week ahead. Cheers.